Hey, it's 8:07 a.m. Central Time on Friday, November 3rd. Let's jump right into our pre-market trade setup planning using Vulcan Trader. Now, today our intermediate term bias is neutral bearish and our short-term bias is neutral bullish. In the overnight session, the market balanced in a narrow range, and then following the NFP number, we saw a breakout above Thursday's high, which has now taken the market up into the 43.56.5 to 66.5 initial resistance. Now, as long as buyers can hold ES above Thursday's high, or at the very minimum above the 43.2275 to 32.75 initial support, they can still maintain intraday control. Now, if this is going to be a legitimate breakout above yesterday's high, the market should not even go back down into initial support. Ideally, we want to now see the market holding above yesterday's high. You can see over here, based on this fib measurement, that a pullback to yesterday's high would be a 61.8% retracement. And strong markets typically don't pull back that much. So even though we have initial support at 43.2275 to 32.75, if the market reaches that zone, it will already be a sign of intraday weakness. So if the market is indeed going to head higher, then I want to see it holding above yesterday's high of 43.39.75. And a failure to hold yesterday's high would be the initial warning sign, which could then result in a downside move. So as long as the market's holding above yesterday's high, there would still be potential for upside movement, and on the upside, a breakout above 43.56.5 to 66.5 on broad market strength and sustained upside momentum would serve as an intraday bullish confirmation. And simply a lack of strength or a lack of momentum at these higher prices has potential to attract responsive sellers. Now, as day traders, we can usually find good setups on both sides regardless of the directional bias. Now, in this current environment, we have a situation where the short-term bias is neutral bullish, but the intermediate is neutral bearish. For day trading purposes, the short-term bias usually gets more weight. So as long as we're seeing continued strength and upside momentum in real time, we are going to give more edge to the buyers above Thursday's high. A break below that level would be a red flag, and then we may have to switch our focus to the short side. But above Thursday's high, our focus should be more so on the long side, and we should exercise caution on the short side. So initial resistance is not a high confidence short, simply because the market has already tested that area and buyers are in control above Thursday's high. So even though we can set up a potential short at initial resistance, I would need to see something in real time in order to take that trade. But if the market gets overextended into the upper zones, like 43.9475 to 44.0475, that is an area where the market would be exhausting the range potential. It's a good enough area of resistance where sellers are likely to be active. It's a Friday, we're heading into the weekend, so the likelihood of new buyers putting on risk from those higher prices is fairly low. And for that reason, I'm expecting sellers to be active at 43.88 to 92.5, as well as 43.9475 to 44.0475. Now, in the event that the market gets all the way up there, we would already have an intraday bullish confirmation, so we don't necessarily need to put in a large reversal off that area, but we could quite easily pull back to 43.79.5 and even 43.66.5. So that's the final target. Now, when I'm setting up these zone fades, I like to make sure that I can get 2R even into the high probability target. And for the entry here, I may actually get a little bit more aggressive and take it at 43.98. And then if the market actually ends up going all the way down to 66.5, I get 2.5R. If not, then at least simply a move down to 79.5 would have 2R potential. I also like that my scale out is at 90.25. So as long as we're not dealing with another trend day, I think that would be a pretty good trade setup on the day time frame. The 88 to 92.5 may not be quite as good, simply because we would need to see a larger downside move to get 3R, and I think that's going to be difficult. So for this trade, I'm going to use the final target of 66.5 as well, and we can see that 87.75, which is one tick ahead of that zone, gives us 3-to-1 reward to risk in the event that we get a push back down into the top of initial resistance. Now, these trade setups are subject to change, based on the real-time intraday context. So for example, if the market prints a first hour high around 43.72 or something, then I may use that as the high probability target. Right now, shorts are counter to the short-term bias, so they are going to require a bit more refinement and a bit closer management. So these are the targets I'm using as just my pre-market, pre-planning, but then as day traders, we always should take the real-time intraday situation into account, and these targets may get adjusted. So I'll deal with that when the market actually gets there. But this would be a okay short, I think, on the day time frame. The 43.98 is a decent one simply because the market would be exhausting the range potential by the time it gets there. And then beyond that, ES will start running into just structurally better areas of resistance. So from 44.13 quarter all the way up into 44.47.75, these are all pretty significant areas where there is a higher probability for larger time frame sellers to step in. I'm not anticipating the market to get all the way up there today, but in the event that it does, these would be good spots to look for shorting opportunities, especially the 44.29 to 35 and 44.37.75 to 47.75. This is also a range extreme. Again, not expecting the market to get there today, but in the event that we do push higher into the 44.13 quarter, 23 quarter area, as long as it's not happening in the last 30 to 60 minutes of the session, I think it can still make for a good shorting opportunity. So on the upside, those are the potential zone fades we're going to look at. On the long side, it's going to be difficult to pre-plan the trade setups because if the market goes down into initial support, that would already be a red flag and a sign of intraday weakness. It could be signaling the beginning of a false or failed breakout above yesterday's high, which could then result in a move down into the support zone at 43.06 to 13 and possibly even 42.90.75 to 99.75. So I think what we can do is perhaps structure a trade around the 43.39.75 level with our stop behind the previous VPOC and gap fill. So we'll put our stop at 35, and on the upside we can target 72.5 to 79.5, and that gives us a potential entry of 43 quarter, and that's right around the 50% retracement. It's right around the 24-hour mid at this time. So this could be a potential long as we're not seeing any downside momentum in real time. It's aggressive trade location, so it only makes sense if the market is heading down there with the NYC tick holding above zero. The ideal situation for that long would be if the tick is testing the zero line right as the market pulls back into the 43 to 44 area. And as long as that momentum is present in real time, it would be okay to even get more aggressive with the entry and be willing to buy it at even 45 or 46. So that's something that will require a real-time assessment. As far as initial support goes, as I mentioned earlier, I don't even want the market getting down into initial support, and if it gets there, that would already be a red flag. So I think it makes sense to be cautious at initial support because a strong market should not retrace all the way back down to the launching point of the upside move. So I'm not as interested in buying initial support, but if ES pushes lower into 42.90.75 to 99.75, I think that would be a nice area to buy first time down. It's the intraday bias confirming zone. We have a major high volume node there. It marks yesterday's RTH low, and given the recent bullishness, buyers can be active at pretty much every area of support that is a bit lower. So initial support calls for caution, but 43.06 to 43.13 is likely to attract responsive buyers on first test simply because the market could be exhausted into it and our short-term bias is neutral bullish. So in the event that the market does go down there, I would expect at least a reaction. Now, the question is, where do we set our targets off of 43.06 to 43.13? Well, in that situation, the broken initial support at 43.22.75 would then be acting as resistance. So the high probability I'm going to set to 22.75, and in this case the final I'm going to set to the overnight VPOC, and that means the entry would need to be 43.09 in order to get 3R. And in the event the market pushes lower into 42.9075 to 99.75, I think then we have to be even a bit more careful. And in this situation, I'm going to shoot for 12.5 as the high probability and 22.75 as the final. And that means I would need an entry at 95.25, which is pretty close to yesterday's RTH low. So in the event the market's exhausted and this gets filled, I think it's very likely that the scale out would get hit within a matter of minutes, and even testing 12.5 is not going to take a ton of effort, and then the final target can be 22.75. We can see that if the market only gets to 12.5, we can still get 2.6R out of it. So what we can do is make this entry a little bit higher. And this particular zone is the intraday bias confirming zone, so contextually it is a stronger area, and that's why I'd be willing to take an even more aggressive entry and just get 2R out of the trade. So what we can do is structure this for a 96.5 entry, and then if it gets to 22.75, we get about 2.5R out of it. So this would be a very good place for buyers to step in, first time down. A break and hold below 42.9075 would be an intraday bearish confirmation, and that can then lead to a test of 70 to 78, and the market would be exhausting the range potential by the time it got here. So again, we can expect buyers to be active there as well. The only difference is that now that 42.9075 to 99.75 could act as resistance. So I think it makes sense to be a little more conservative with our targets, and I'm just going to set this to actually 94. So we're going to get out actually a little bit ahead of yesterday's RTH low in this case. So 73.75 and 67.25, and I'm not expecting the market to go all the way down into these zones, but in the event that it does, we can certainly consider taking these trades. So that is a wrap on the pre-market trade planning exercise. I think it's easier in this situation to plan for zone fades at the upper resistance zones, simply because right now the buyers are dominant and those zones do have a real potential to get tested. The long side is a little bit more difficult to structure, at least ahead of time, simply because we would need to see signs of initiative buying in order to take a long setup. And initial support, we're going to exercise caution, but the lower zones, I think, are going to be better spots to at least get a reaction. And I think initial support may get a reaction as well, but again, strong markets don't pull back that much. So that's going to be a wrap on today's pre-market trade setup planning exercise. I hope you guys found this to be helpful. If you did, please share it with other traders. Help spread the word about Vulcan Trader. It's a custom proprietary platform built with a singular focus on helping traders generate consistent profits from the futures market. All right, guys, that's going to be a wrap. Good trading today, and I will catch you in the next one.